It's Sunday, the 24th of June 2018. I haven't done a video for 4 or 5 weeks. I think the last video I did on gold, the gold chart, was this breakdown below 1300 that happened in mid-May. Since then, I said the likely scenarios we tend to this lower trend line and retest this low from December last year. And it consolidated well for a few weeks, and then had a big volume day a couple of weeks ago, last Friday I think it was, last Thursday, and that was the highest volume day since 2016, and that only really surpassed by, well, there's one or two other days in there in early this year, but since the Trump victory in 2016, which is by far and away the largest volume day. So it's incredibly high futures volume there, showing a little bit of a few signs of reversal potentially here. This 1255 level was the low in December, and we've got this rising lower trend line as well. So potentially, some very early signs of bottom there. Dollar index is starting to drop a little. I've started using another chart for the dollar index, because I think this one here's got the futures information from the past is a bit broken. Some of the values are wrong. You can see here this support zone from 2015 to 2017, and obviously we've come up and we're sort of testing that now. It's failed to break through this sort of 95 level decisively, and it's held up where it did in October last year at 95 again. So this is a key sort of point whether we start to turn down again. It's been a very strong run for the US dollar the last couple of weeks. I think everyone's bullish again on dollar, bearish euro, the same sort of stuff we were hearing back in 2017 near the highs, or 2016, sorry, near the highs. And I think possible scenarios we tend back down toward could be sort of an inverse head and shoulders pattern here, left shoulder there, head here, and we drop back down to this 91 sort of region and form a right shoulder before it starts to, it looks like it might form that sort of pattern. My general sort of feeling is that this is a bear market rally, and I think the US dollar's got further to fall, and I've gone through the reasons for that before, but that's sort of my overall thesis. And so it's sort of poised here. I think it's just a little bit overdone, the extent of this rally in the last 6 weeks or so, and that's obviously coincided with the weakness in gold, as it usually does. Those two tend to be inverse for the most part. They'll work inversely, the US dollar index and the gold price in US dollars. Some of the other things that are going on, the S&P 500 is sort of stalled a little bit. I think since we had the March, April, or February, March sort of falls, my call was for this to move back up toward this sort of 2780, 2800 region, I think I said, and we've really started to get there now, and it's sort of stalling a little bit. And my whole reasoning for this was purely just a analog of 2000 .com bubble, where it failed to it went back up to try and test the highs that had previously formed, and it made sort of not quite a new high in mid 2000 after peaking in sort of March, April. So I think we're very much in the same sort of part of the cycle at the moment, after this massive run for the last since 2000, so last 8 or 9 years, 2008, last 8 or 9 years, that I think is really coming to an end with this sort of cycle. And it takes a while for these things to play out, though, so nothing ever happens overnight. And but a lot of the signs in the market is this is kind of an ending phase, and it's been relatively weak. The Dow Jones has been a bit weaker. One of the reasons why the S&P's held up is that a lot of the constituents of the S&P are the FANG names, the Facebook, Amazon, Netflix, Google. All of these companies are in the S&P 500, but not in the Dow. So that sort of those constituents have helped push the S&P 500 index, or hold it up anyway. But the actual, if you look at this, is a chart I saw this morning. Since March, you can see here that this is the FTSE All World Index, which includes a bunch of the largest companies in the world. But you can see they're largely flat. This is in US dollar terms. They're flat basically all year, and particularly since that February peak in the US market. But you can see here that the FANG names have really driven the index. So that, I think I saw this said here that these FANG names have made up $375 billion of the gains in the market this year, and that's incredible. The entire S&P 500 Consumer Discretionary Index is down 57 billion, and these four names are up 375. So it shows you how much concentration there is in these stocks. And when you look at some of the individual charts, like was looking at the Netflix chart, and I've talked about this one a few weeks ago, and it's gone more parabolic if that was possible. This has doubled since January. It's gone from 200 to 400. And this is just lunacy in my view. Some of the other ones are probably not as Amazon's a stronger company in my view than Netflix, but its chart has gone parabolic as well, but it's testing, but sort of a weak. It's not parabolic, but it's like it's formed that high there on a huge volume of the sell down, and then it's making sort of new highs again. But the volume and sort of the general, the relative strength is showing kind of a divergence here from the previous peak, and you can probably see it easier on a weekly chart actually. This is sort of textbook charting, is when you make that new high, but you have this sort of lower levels on the RSI or the stochastic, and that's an indicator that this is sort of really sort of a bearish formation forming. This could go on for a long time, but this is not. You want to see these RSI values sort of getting higher as the stock price increases, and this high volume here as well. So we're making new highs on lower volumes and lower relative strength, and that's weakness. This could go on for who knows how long, but I think these names are very overvalued, and it's in the broader sense they're the ones that are holding up the market. So they can also, if the rest of the index is weak and these few names are holding it up, it doesn't take much if they're having individual company issues. Like Facebook again is another one that's gone to new highs even after all the being pulled before the US court system, and I think before the Congress, and having to testify and all that. But it's back up to new highs. But again, look at the volume on that sell-off. This is a sign of a weak sort of marginal new high after massive volume sell-off at the end of a bearish trend. This is the sort of stuff you tend to see toward a top. I don't think this is going to go a lot higher. I think I wouldn't want to own these stocks right now, but that's just me, and that's what everyone's in, and that's what's holding the index up. So I could go on for a while about that, but I'll stop now. The Australian dollar has been extremely weak in light of that US dollar strength, and really just can't, not showing much strength at all there, breaking down below this trend line around 76, breaking down below the lows again last week. So now it's trading at 74.5. I don't see it, even if the US dollar index starts weakening, my view is you don't want to own the Australian dollar, and that's why I've had that bias toward Australian dollar gold stocks for so long now, and mentioned a lot of times in these videos. And I think this Australian dollar longer term is going well below 70 cents. And if you look at the Australian dollar gold price chart, which I've shown many times, still holding its nice little rising trend that's been in place for a few years now. Pulled back a little bit the last couple of days, but still above 1,700. And a lot of those companies are making extremely good money. And you've seen highs for a lot of the mid-cap gold miners like St. Barbara are making new highs. Saracen also doing very well. Evolution, Northern Stars, not quite making new highs, but again showing extreme strength. And I'll do a video on those ones shortly. it's holding that lower trend line, and I think it's going to continue to do so. Not getting up to my target of 2,000 yet, but if the Australian dollar really weakens, and concurrently we see a gold rally in US dollars, I think that's when you see these really big spikes here, is when risk-off periods, something like the trade conflicts that are kind of brewing a little bit here, and if you saw a really big sell-off in the Australian dollar at the time of global sort of uncertainty where money would go into the gold price in US dollars, that's when you see these big moves. So I'm looking for something like that again before the end of this year. But, in the meantime, happy to own those companies making good profits. The ASX 200 is looking interesting as well. That's really spiked in the last 2 weeks, back up to now exceeding the highs early from this year, but now it's up to 6,200. And this is just ridiculous in my view. But I guess a lot of the strength from at the start of this year and probably a lot of 2017 was in the bigger mining companies, which are benefiting from that tailwind of Australian dollar weakness. But that's not what's been. Those names like BHP and Rio had been not pulling the market up again in the last couple of weeks. You can see here BHP's pretty sideways, a little bit toppy there, but not doing a lot. What's really been pushing the market higher has been the bank stocks last week, having a real, what looks, massive rallies off the lows there. So almost 10% rallies in the space of about, 7 or 8 trading days. And they're all quite similar. CBA is the one I use, and I talked about the breakdown here a few weeks ago where it went down below 73 and it really fell quite quickly after that. But, it's having that big rally again. I don't know what's driving that. I read some ridiculous thing that people were selling Telstra shares and putting that money into bank stocks, and that's what was driving them higher because the dividends from Telstra are under threat. That seems ridiculous since it's sort of out of the frying pan into the fire in my view, where these bank stocks are, going to come under regulatory pressure, already are, politically going to be under pressure as well. It seems, and at the end of a major credit cycle, I think it's pretty stupid to own them. But anyway, that's where the money's going. But that's what's pushing it higher. Also there could be some end of financial year sort of window dressing, as often happens before June 30. So it's up new highs now. So all the momentum traders are going to be jumping on here. Maybe that's what's happened. It's after it broke through that 61 sort of 40 level there, people have jumped on, and that's propelled it higher again. But I don't really want to be in those names for a lot of reasons, and in general, I don't view the Australian economy as overly strong, but it could go a lot higher again. It's broken out here. You could say it's kind of broken out of a double bottom there from 57.80 sort of thing to this 6100 level. So you could have upside maybe up to sort of 6400. It's definitely conceivable here. But I'm willing to stay out of it and miss those gains and stick to my knitting in the gold stocks. Speaking of which, the GDXJ and GDX very, very weak, but also with no volatility. So the price hasn't really been declining. It's been going sideways. This is one of the reasons why I view the gold price is likely to hold up, because often the gold mining stocks tend to predict the movement of gold, which people who don't follow the mining index, mining stocks sort of forget that the mining stocks tend to be the predictor of the gold price movement and not the other way around, which can be a bit hard for some people to understand. But anyway, that's what looks like happening here. Even though the gold price has fallen sort of say $50 in US dollar terms in the last 6 weeks, the GDX is really quite stable there, and down maybe 3 or 4%, which is nothing in the scheme of things. But the thing to note on this chart for me is just the lack of volume. There's no interest here, and you can see here the average volume on that 40-day moving average there that I'm using, down back to the levels of this period in June of mid 2015, when the real depths of the gold market. So there's very little interest there, and the GDXJ is pretty similar. So that's the main takeaway I'd have from those charts, is not the price movement, but the volume. There's just no one's interested, so the lack of volatility, the lack of interest, that's in my view. So that you can see there, the volume on the GDXJ is back to levels not seen since early 2016. Also, toward the end of last year as well, but it looks like the volume sort of really tapering off here. But with those really compressed sort of regions of low volatility, that tends to lead to breakouts either way. So I don't view it as being down, because the fact is that a lot of these companies are actually performing quite well and are in the best fundamental shape they have been for some time, and that's across the GDX and the GDXJ. And a lot of the commentators of the gold mining industry are saying the same thing. So for me, it's unlikely that they break down lower, but we'll wait and see on that. So that's sort of a long-winded view of the major markets that I follow. Gold being the main one, obviously, really pivotal sort of area here around this 1265, 1270 area on this uprising lower trend line. See if it can hold that. We're in a period of, we do tend to see weakness around this time of the year in gold, particularly in June and in December tend to be the weakest months for gold and gold mining stocks. In my observation for the last sort of 5 years, you can pick up quite good bargains. You have factors like tax loss selling in Australia as well for some of those mining companies, whether that's a big deal. It's obviously not a factor in the bigger mid-cap names that are doing well, but in some of the small caps where people want to take some money off and there's a lack of demand as well, that can amplify the effects as well. But I'm hopeful that it's going to hold these levels around here. If it doesn't, if it breaks decisively below this 1250, then you'd probably have to think that 1200 comes into play, which has sort of been my line in the sand. And if we had another big volume day like that one last week, it's quite possible that they could target that line and break down. And that would, if you start to really get toward that 1200, I'd have to really assess some of my positions in some of these mining stocks that are. But even then, I'm still hopeful in a lot of the companies I own that they're kind of going to do well in many gold price environments, particularly one in which the Australian dollar is falling more than the US dollar gold price. But that's how I'm feeling about a lot of the markets at the moment, and I'll wrap it up there.